Hello all, welcome to this session of openmentor.net on supply chain management, SCM. In the last two sessions we talked about different components and then the different aspects of supply chain management. In this again we are going to talk about some concepts in supply chain management and some problems that people potentially will face. One of the key area in supply chain management is material tracking. We talked about an operation called movement of goods from the origin to the consumption point. So the material is moving, it is getting transformed. At any point of time, if you want to track, how do you track? Again, certain material are transformed or say transferred from one place to other place as it is. In other cases it is transformed, especially in terms of pure manufacturing. From raw material it's all transformed. From the point of assembly to the end consumer, it's all as it is shipped. For example, let us take tomatoes. A company that makes sauce using tomato, it's not sending tomato as it is to the customers, it is sending only sauce. So you cannot track a single tomato how it reaches the end customer, right? But if you take a computer has lot of parts manufactured by different people, different companies, okay? So each part will go as it is, but they are all assembled together inside the computer. Later on, if there is a failure of that particular part, you can still track, right? So this is called material tracking. For this, usually you could have seen everything called part number, serial number will be used for tracking, and you will also see a barcode. Behind everything there will be a barcode in black and white stripes which is universally coded, and for each part they would have given this barcode. Within the computer, the memory chip might have been manufactured by somebody, hard disk might have been done by somebody, the fan by somebody else, monitor by somebody else, mouse by somebody else. So each part will have its own part number, serial number, but as such the finished product, right, that will have a separate number, part number, serial number. So what happens is, when some material is assembled and then sent, still for the service reasons, there is something called the servicing with respect to customers and the failures of product. You need to do the servicing for the customer after they procure. Then at that point of time there may be a chance of failure. You need to have customer support agents or service agents who go and then meet the customers, correct the product and then come back. But what about the failed ones? You need to still track. So this is called material tracking, and the extent of visibility is one of the key factors in tracking. How deep I can go and then track? Can I go and then track that the battery that is there in a particular mobile phone is this? Is it with which person? Is it in which country? Where is it? Right? That kind of tracking is done by a lot of global people, global companies. The reason why they should track is that it helps in servicing, it helps in preventing further mistakes. So material tracking is one of the areas that is very important in supply chain management. Then This material tracking is not just with the customers. Then stock transfers across national borders. We have already talked about something on taxation and customs. Within the country, the law still allows in most of the places that you may have to pay some extra tax from one place to the other. But when it moves across the borders, you need to go through customs also. You need to give some certificates, clearance certificates. At that point of time, it's not only just taxation, it is coming about clearance certificates, then compliance certificates. Compliance meaning whether you are compliant to certain global rules. Those global rules are governed by many bodies, international bodies, whether you comply with that, especially in healthcare, pharma. There are a lot of strict rules. People call it as FDA, Food and Drug Authorities, right? They control a lot. So the compliance part is a vital part when it goes across the borders, and you need to get a lot of clearance certificates. At the same time, there are some trademark violations rules, whether you have been violating the trademark or the patent, right, in that particular country with your product. So the supply chain management, just by the mistake of a truck driver who dropped it there, it doesn't mean that your product is going to sell there. So you have to satisfy a whole lot of compliance and legal items when it crosses borders. This is another area people need to look at it. And another important item is the distribution channel. Typically you will have wholesalers, dealers, then retailers, then consumers, right? Wholesalers are biggies who can store a lot more items in their godowns, whereas dealers may have they do the same purpose as wholesalers, but they have a lesser space. Then retailers are the ones which are like shops, showrooms, where they actually showcase the product for selling. Then consumers are the ones who are buying it. Then within these, layers may exist. So the supply chain need to understand how many layers you want to add. But remember, every layer has its own cost. The more you add as layers, the more cost you are going to incur, because everyone needs the margin. So the layers will have, at the same time, then boundaries or territories. This dealer is dealing with this particular region or a territory. If you allow multiple dealers in the same region, then there may be a potential problem. To whom you will favor as a manufacturer, but the dealers will expect different discounts, right? It is up to the company to arrive at either at a strategic or a tactical point in terms of how many layers they want to have. What is the way they are going to draw the boundary between dealers and wholesalers? Of course, retailers are shops and showrooms which are very specific to that particular city or town. They have a physical fixed place. But who is going to deal with them, supply to them? There will always be competing dealers and competing wholesalers. So the company needs to look at a strategic level or at a tactical level to address this kind of an issue. So the distribution channel itself may have a lot more issues in that, especially logistics cost is huge. It's always that minimal route they need to cover. Minimal route to be covered, at the same time offload or onload maximum material. This is typically an optimization technique where, suppose you pack 100 computers in a truck, and you need to distribute it to multiple consumers or dealers, what is the route in which you are going to travel? If you travel multiple ways, and then if you cover say 100 kilometers, whereas if you carefully plan, you can cover that in 70 kilometers. So there's a logistics cost that you can optimize. So for this, there's a lot of algorithms used. Typically there is something called traveling salesman algorithm. The salesman needs to cover 10 different clients. They are all located in different places. What is the route that this person has to take? That's called the traveling salesman algorithm. It is not easy. It changes from time to time. So the logistics people need to plan what is the shortest distance you can cover, what is the maximum material you can either offload or onload. This is one of the practical items that can save lot of dollars in terms of cost in your logistics area. Remember, logistics is one thing that can chew a lot of your profit margin. So be aware that you concentrate on logistics to minimize the cost. Now with online shopping in place, so what this has brought in, traditionally even today 95% of sales, I could say 90 to 95% of sales still happen through shops. People prefer to go to the shop, touch the item, feel the item, then buy, right? The purchase still happens 90 to 95%, but still the 10 to 15% is still on, or say 5 to 10% still happens through online. When there is online, there is no retailer in online. So when there is no retailer in online, that means you can get items at a slightly cheaper rate. Reason? The logistics cost of the wholesaler to the dealer and the margin of the dealer is reduced. It's removed. That component is removed, so you can get a better price. That is why online shopping is picking up. So you can get good deals because it eliminates a layer. It eliminates a layer in supply chain management. But still, from the warehouse or from the dealer, you need to still get it. For example, if you take big time online shopping, things like Amazon.com, right? They should have lot of dealers and wholesalers, their warehouses in every country, so that the logistics is minimized. You can remove that retailer component, but still the wholesaler and the dealer component still exists. So they need to have a better way to do that. So the online shopping is another area. So this online shopping, that has given a different dimension to supply chain because it is global. Since it is global, for example, so far before 1995 or so, even before 2000, usually you could see only local brands or the brands that are within the country. Any other brands that are coming from foreign countries, they used to have a lot of cost involved. But today it is not the case. You could see foreign computers selling more. You could see foreign clothing selling more. Reason is the brand awareness has increased. At the same time, they are able to get market through online shopping also, and still eliminate the local dealers and retail shop, or still have them as a specific showroom or retail outlets, or say factory outlets with different discounts. So it becomes global. The brand awareness is very high, so you can still sell your items in an unknown place, but internet is there. So supply chain management now covers internet also, tracking items through internet, right? So the item here is order booking to tracking, all happens via net. So there is nothing specifically involved. So this internet online shopping has given a different flavor to supply chain management, right? So with all these things, what companies try to do, remember, from where to where it is moved, move maximum items in the shortest path, right? Optimize everything, optimize production cost, optimize production itself, minimize your logistics cost. So at the end of it, you need to manage the cash flow, right? Cash flow management at various stages. Cash flow management at various stages is all happening in supply chain management. This is the key because there are multiple entities involved. If one of the brands that is selling through wholesalers and dealers, if they are able to give a value addition to the wholesalers and dealers and retailers to minimize their cost, obviously those people will go and then stock their products. So it is the companies or the brands that sells, that company is now helping all the others in the supply chain as a value addition to improve their efficiencies, right? So this cash flow management, and they may have credits, there are a lot of policies, right? Credits, LCs, so many things are available to control the cash flow management of wholesalers and dealers, right? The company may I don't use the word dump, it's just a stock to the dealer, right? But still do not ask money now. Give a credit of say 60 days. Give the material to the dealer, but ask him to pay only later. Many companies give this leverage because they know it's not that easy to sell, so they will give a lot more things, right, to the dealers and wholesalers and the retailers as credit. This is purposefully done to enable the cash flow for everybody. And when it comes to supply chain management, right, it's not only that the cash flow, right, it is not only the material, ultimately the customer satisfaction on the goods purchase. They don't care, customer doesn't care how many hubs it has traveled to reach that person. If it is good, they will say it's good. If it is bad, they will say bad. But when the customer is expressing dissatisfaction, they need to analyze which part in supply chain management, in supply chain, has gone wrong. They need to analyze that. Whether it is the raw material itself having problem, or assembly having problem, or the logistics, during logistics there had been a problem, right? So when the finished, but ultimately customers will complain to the company which gives the finished good, but the finished good may have multiple parts in it. The failure may be because of a part that is given by a supplier. So it is ultimately the responsibility of the company that sells that brand. Customer knows only that. So the customer satisfaction at the end of the supply chain is very critical for all the companies. With this, we stop this webinar in supply chain management. Thank you.